Good morning, Predicted Trades family. Hope everybody's doing well. My oh my, we had a wild day on the market yesterday. If we take a look with our beast tool, there we go. That's a little better. So yesterday on ES, Mama Market, S&P Futures, kind of our main compass, main gauge. We opened kind of in our open range sell zone, had a little dip down to our open level from the overnight on ES, and it held. Basically, when it slips below something key, like this open level, and then starts to break back above, that's our signal to go long. And man, did those longs pay out. ES went from that open level around 38.13 and rocketed up near that 38.60 and to our outer shaded destination sell zone. You can see pretty much tapped the midline of that zone, and then for two 30-minute candles, you can even count this as the third 30-minute candle, it could not get back through that high. And it's worth, watching. I always have a chart over here on a different time frame, like a 30-minute candle, so I can see those 30-minute candles as they're starting to form. Once we get two candles up in this region with a nice floor on them, once that third candle can't get higher, then starts to break lower below that 38.55, that was a good signal to go short, and it happened fast. We had a hard dump right through it, and they just kept dumping. So you have to jump in fast. You have to pull up your strikes, hop in, be ready. That's why when we got up here, I said I am locking the majority of my long. I'll leave runners in case we keep going, and I'm starting to size up shorts. And that's basically how we do it every day. We, at the beginning of the day, said I'm watching these calls, took shots once we held open, ride them up to our destination zone. We're locking up most of our profit, leaving runners in case it goes. And then we are looking at the shorts and starting to take position. We dumped right on back to 3,800 and almost to the daily 21, which is this white line down here at 37.89. We held the bottom of a 30-minute squeeze that started to form, and then we rocketed right back up to the top and back to that 38.55 with a nice little slip into close. And even that slip into close, some of those SPX options, like the 38.35s, went like $1 to 10 in that drop. So very fun day on the market yesterday. Pretty much everyone in the room was killing it. So, what do we have in store for today? As we can see, the overnight session pretty much contained, not pretty much, the overnight session was completely contained inside yesterday's range, which was pretty wide. And I mentioned that because we want to keep an eye on yesterday's range. It's going to be key today. As you can see, we have a bunch of squeezes that are all now stacked up. Basically squeezing, where are we, right here, on every time frame. Let's expand this a little bit. There we go. So, squeezing on every time frame, even on the daily. And our squeezes are very tight and stacked around yesterday's range. So, wouldn't be surprised for today to be a chop day leading into CPI tomorrow. I'm going to go ahead and turn off our beast tool so we can get a little clearer view of our levels, because the levels are also going to be very key. we have our daily moving averages all stacked right at 3807 and down at 3790. Let's see. Basically, if we can hold our daily moving averages, this 3807, these squeeze bottoms, we can see a nice push up to this 3843, 3855 again. And would not be shocked to come back down off of those, just kind of meander around in this range leading into CPI tomorrow. But one thing we want to be weary of. Come on, what are you doing? Ah. All right, I'm going to get rid of you. You're being a pain. There we go. One thing we want to be cognizant of, weary of, we have our trend lines from the highs of last week's run up before FOMC. And those highs are kind of the trend line that we poked through, but now it is keeping us down. We are starting to go sideways through our trend line that our channel that we were going up in. And you could draw, let's say another trend line maybe here, like so. But point being, we are starting to test and slip through our trend lines from low on this rally up. And we're being held down by trend lines from highs. So that's kind of why I titled the video today, "Are Sellers Poised to Try to Take Us Back Down?" Because we've had a great rally up, but for ES at least, we have not gotten back to where we sold off from, 3,900. And yesterday, we ran into resistance and had a sharp sell. You might say that this pop back up was just profit taking from sellers, shorts covering and reloading, getting a little gap down here. So we need to be ready. Could we slip through this 3807, this 3790? If so, we're getting back to 3773, and should that give out back to 3741, 3708? Not saying that that necessarily happens today, but if we are looking weak all day, going into CPI, could be sellers getting ready for a dump on CPI. We did have some verbiage that came out yesterday from Wunsch at the ECB saying that inflation numbers are a little worse than expected, that CPI won't go well, yada, yada, yada. So we've gotten a little preview, and that happened right as the sell-off started yesterday, that those words came out from Wunsch. I think that was from Brooklyn Nine-Nine. Wasn't there a Madeline Wunsch? Either way, pretty simple. We are in a range. We are in between yesterday's high and low. Would not be surprised to see us chop there today. Going into CPI. Already mentioned that. If we start to break down 3807 and a half, 3800, we're going to go test that daily 21. And if that can't hold, which is pretty much near yesterday's lows, if that can't hold, then we're going to 3773. Our last hold in the wedge on Monday that sent us higher. Before we get going too far into where we can go today, we'll take a quick look at our economic calendar, like we do every day. Today, looks like we just have a little bit coming out at 10 a.m., wholesale inventories. We've got a Fed speaker at 11, and then the rest of the day looks clear. Tomorrow's the big one. CPI, jobless claims, hourly earnings, a Fed speaker, or 2, or 3, or 4, or 5. So tomorrow's going to be a big day. It's going to get things moving. You know, we've seen instances where I'll probably have to go back a few weeks now, won't I? Where was the last CPI? I believe it'll be this one, where we dump hard pre-market and then rally up all day, and it kicks off the next rally. So we could see something similar where we dump hard on earnings. I'm sorry, on CPI, but we get down near support, or we push too hard pre-market and we get a rally back. So just saying, we need to be on our toes and ready for these kinds of reactions, to understand if we can go further or just going to turn right back around. And we never know, those CPI numbers might come out decent to where we hold up at our daily moving averages and then start to rip back up to that 3,900 that we sold off from. But coming in on some wedges here, need to be ready for some sideways action until it breaks. Let's go to NQ. And let's drop down to a normal time frame again. NQ. On all indices, we are wedging, or we are squeezing on all time frames. So on NQ, just like ES, if we can hold up at this 11,000 at open, we could see a nice bounce to get back through this daily 8, maybe back up to the daily 21 and 15. Have to take out some pre-market levels. But with the squeezes all stacked and thick like this, chances of breaking higher are a little slimmer, right? So if we can't hold at that 11,000, we're coming down to test this 950, kind of our lows from yesterday. And if that gives out back to this 890 and 850, where that first Keltner to the downside sits. In Q, a little weaker, the only index that's gotten back to the daily 21 and rejected and kind of moving away from it. So we have to keep an eye on NQ, and if tech is going to continue to be weak and drag us back down. On to ready. So ready, as you can see, in that same wedge, has not gotten back to where we sold off from FOMC, and that wedge is now getting tighter and tighter. I think I will update this just a hair. Update this trend line to yesterday's low. Which falls right around that 1800. So if ready cannot hold 1800 early and starts to slip it, coming to 1790 at the bottom of these squeezes, and should that give out, then she's going to slip back down to this daily 50 near 1775. So definitely want to keep an eye on ready, just as a gauge and a signal. If it starts to break below this trend line and can't hold at 1790 and get back above, it's giving the first signs of indices breaking down. But if it can hold at that 1800, could make a nice move back to 1820, 1830, and maybe even yesterday's highs around 1840 and this first Keltner up. Got to see if buyers that have been leading us up on this rally are going to step in today to defend the fact that we are near trend lines and near lows from yesterday. YM, the strongest of our four indices. YM did make it back above FOMC where we sold off. Yeah, basically from that like 33,000 to 32,900. We need that to act as support. Even though we got above, this is some older time. I just want to check where that's coming from. Sorry. Ay, ay, ay. All right. Well, I'm not going to worry about it right now. Sorry. I just disregard this. So pretty simple on YM today. We need to hold up at that 32,900 if we start to slip below 33,000 after open. Do have our pre-market low that we're holding for right now. If we start to lose that, coming to test this 32,900. Looking for a bounce, either there or at open off this pre-market low. And for YM to try to get back up to the zones, or sorry, the levels that it got up to yesterday. It's 32,200 and about this 350 at the top of these squeezes. One thing to note, YM is at the third Keltner to the upside. If you're not familiar, oh geez, is it not? Okay, never mind. Third Keltner to the upside sits a little higher. Sorry, I thought that was third, but it's just the second Keltner. So, YM almost made it to the third Keltner before FOMC chopped around that second Keltner, then reverted almost back to the mean, not quite. Now we're back at that second Keltner. So, let's see if we can hold up today at this 900. Continue higher to try to get to this 33,500. But we do have our squeezes in place and our range from yesterday. So let's see if we stay contained in that range. If we start to lose that 32,900, she could slip right back to 32,650, 600, right around this daily 8. We have the daily 200 as well, near 32,530. Moving on, Apple. Apple did a decent job holding up at our key zone here at 138, 138.8. Looks like we're going to be opening right in that today. So Apple has been weak pretty much every day at open. We had this big pop up and then dump down. And then each first 30-minute candle lately on Apple has been weak. Just pointing that out because if we do have a weak 30-minute candle and start to lose that 138, 137.5, then we might be firing these squeezes to the downside to go retest 136. Should that give out, kind of down to this 2-day squeeze that starts at 134. We have a key zone at 133, 132.6. And the big key level 131 down at the bottom of this 2-day squeeze. But let's see if Apple can hold up at this 138 and above yesterday's low at about 137.5. And try to push its way back above 139, 140, up to 141. I know where it topped out yesterday. If we can see some rotation into tech, into Apple today, leading into CPI, like most things, I expect it to stay within these big squeezes. But, if it can get going to the upside, it looks like that daily 8 is going to be sitting right around 142. And the daily 21 is going to be in our zone at 144.5, 145. So let's see if Apple can settle, and if CPI doesn't tank us, the goal is to get back to 145 this week. AMD. So AMD pushed a little bit more into this daily squeeze, made it to that first Keltner to the upside, then pulled back. Like everything I've covered so far, let's see if it can hold above yesterday's low at the bottom of the squeeze. With everything having a little gap down, I talk about this every day, we need to be ready for the gap fill play. So, if we can hold squeeze bottoms, looking for AMD to move back up off of this, call it 62.5, 63, then work its way back to 64 to fill the gap, and if it can keep going, 65 where that Keltner sits, 65.5, the big key fib level. If we start to lose that squeeze bottom, back to the daily 21, at the bottom of this 2-hour squeeze near 61.5. Amazon. Amazon broken after earnings. This 87.5 is kind of the floor. If we break down, that's where we're going to test. And as we just go sideways at this key fib level, all the squeezes are getting tight around us. Looks like this one's just going to wait until after CPI and the market decides if we're going to continue higher or if we're going to sell back off. But overall, if market can start to push, Amazon, looking forward to get above 91 and try to push off it through these squeeze tops to get back to 95, 97. That's the upside targets. But we are sitting at that third Keltner, weak, going sideways, pinned. So not a lot to do here. BA, just continuing to be strong, made it up to 170. It's 169 fib level. If it can continue to hold, get through pre-market high at 175, 180 are the upside targets if it's just going to keep trucking, but it is near third Keltner, which means it's getting a little overbought. So if we start to reject that 171 overnight high, 170, 169 as well, we can start to slip back to 165. This zone here around 162, 163, 4. That's kind of the downside target zone where we got above and settled on Monday. And if we slip past that, we have the daily 200 near 160, the daily 8 near 156, and our next fib level at 154, which was the resistance when this investor day started to break out. Got near that 154 and pulled back, then took off, and it was support. So if we start to give out this fib level overall, when the market starts to slip, overall wouldn't be surprised to see BA come back to this 154 to settle and find a bounce. But we do have some key levels, daily moving averages, just below as well. So it could just be a small profit taking and then keep going. She could just keep going. BA is very strong right now. Got a lot of wind in her sails. Cat, very much the same. A lot of wind in her sails. Great earnings, fought up above key fib level, held that level, and took off to our next level, making it to 230 yesterday, 232. Let's see if we can hold squeeze bottoms here around 225, 227.5, and try to get back through yesterday's high to keep going to 235. If it starts to give out 227.5, 225, coming back to the daily 8 at 220. And should that give out, then the next Keltner down at 212. We are sitting up above third Keltner, so a little overbought as well. And if some of the names that have been leading and are getting a little overbought start to come down, we need to see the names that have been a little weaker start to pick up. Coin had earnings and still stuck under this trend line from highs and heading lower, almost to key level at 46.18. So looking for it to catch a bounce there and try to work its way back up into these daily 2-day squeezes. So if we can hold 46, looking for it to fight back to 50, 52.5, and back up to these levels and daily moving averages above. But definitely weak. Let's see if we can find its feet. And you could just wait for the break above 50 for an entry. You know, we don't have to catch the bottom, let it figure itself out, and once it starts breaking back above 50, it could set up for a nice run. Google. Google's made a nice push back to these key levels around 89, 89.5. Peaked above them yesterday for a second, now right below them. Let's see if squeeze bottoms around 88, 87 can provide support and keep this going higher. If we can get through 89, 90 and yesterday's high, looking for Google to start making it up to the zone around 91.5, 92. Then to 93.5 where that daily 21 is about to hit. GS 364, man, still trucking. Another name that's been very strong and is at its third Keltner. This, you know, these names that I've covered are a lot of the reason why YM has been leading to the upside. If it starts to give out 360. Probably going to spell a drop down to 355, 352.5, where that daily 8 and second Keltner sits. But if we can continue to stay above 360 and hold these squeeze bottoms, could get a bounce back up to 65, 67, and 370. JPM still strong as well. If it starts to lose 130, then could make a slip back to the daily 8 around 128.5. And if that can't hold, then we're talking back to the daily 200, daily 15, and this key level all around 125. But if it can keep holding 130, next stop's 133, 135. But again, when everything starts getting in stacked squeezes, we have to understand, the four phases of the market. We've been going up in accumulation, now we're going sideways. If we start to break down, it's going to, on each of these names, it's going to start pulling the market down as well, unless we see rotation into something else that's been weak, like tech. Meta. Look at Meta. Popping up above 100. So for Meta, for the longest time, I've been saying leave it alone until it starts getting above 100. That doesn't mean that now that it's above 100, everyone go long, right? Meta has been getting beat up. It has very little good news to be rallying. But it just got down, near, 6, 7, 8-year lows? I don't even know anymore. So, it's at bargain prices, and market's been going up, so not surprised to see Meta playing a little catch-up. Let's see if it can actually live above 100. If it does reject, and go below. It needs to stay above that daily 8 and that second Keltner around 198. If it starts to give out 198, we're just coming right back down into this mess. But if we can hold 98, 100, overall goal would be for Meta to get back to 105, where that first Keltner sits, back to 110, where the daily 21 sits. Then we have some key levels above. But, I do not want to trade this name. I do not recommend it. It is interesting, that little pop, though, pre-market. It might mean some rotation into XLC. I'd rather play Google if XLC is going to get love. Microsoft been very strong in this bounce up, getting back to that 230, 232 zone, and pretty much tapped the mean yesterday, the daily 21. So today, looking for yesterday's low, that 225 and a quarter to hold. We also have the daily 8 in here. If we can hold all that, Microsoft could catch a nice bounce back up to test this 230, this daily 21 at 231.5, and that key level at 232.86. Microsoft has arrived back at where it sold off from FOMC. So also wouldn't be surprised for some sideways action and to stay in this zone. Netflix. Netflix made some decent moves yesterday, getting through this trend line from this sell-off, right? We had Netflix has been going up since earnings and trying to fill this previous earnings gap. Only got about halfway through it, and we've had some profit taking and settling back at our daily moving averages and that first Keltner down. We didn't quite make it to the daily 50. We're bouncing back up to that daily 200 and daily 21. If Netflix cannot get through that daily 21 and 200, this is maybe just a relief bounce before completing the journey back to that daily 50. So, still not out of the woods on Netflix trying to rally back up. Watch your trend lines from the lows because we're pretty much at it. If Netflix starts to break down and loses 260, and yesterday's low around 257, then likely coming down to this 250 to 250. Yeah. And then we have that daily 50 down at 246. But if it can try to keep going, it has to get through the daily 21. Yesterday's highs, pre-market highs. Next up would be 270, 275, 280. The video. NVIDIA made a nice move back to this key fib level around 147 and starting to pull away from it now. Today we basically need 140, 142 to hold us up. If we start to lose 142 in this 1 hour squeeze, we're dropping down to this 2 hour squeeze at 140. And if we can't hold up there, then we're talking about coming back to this 135. I'm not saying that happens today, but if we can't hold that 140, we'll start the journey, right? We have the daily 8 at 138. If we start to break down, it's back to 135 this week, right? But if we can hold up at 142, 140, looking for NVIDIA to get back up to 145, 147, and that big psych level of 150. Almost made it yesterday, but not quite. QQQ. really like updating trend lines, but I'll do it for yesterday's low. On QQQ, we made it back to the daily 21 yesterday, had a hard rejection, and now we're starting to move away from it with this gap down. Let's see if we can hold at this trend line and squeeze bottom around 267. If we start to go below 267, we're giving out that trend line. We do have another squeeze right below us at 266, 265. So we could slip down to get those and bounce them back above 267. So if we can hold 267 or 265 and break through 267, looking for QQQ to get back up to 270 and 272, where that daily 21 sits back to the top of these squeezes. We start to lose that 266, 265, then we're talking heading back to 260. SPX. It looks like already starting to slip a little bit. SPX, like I talk about every day, we need to be ready for the gap fill trade. So SPX did go down and fill that gap, and then once it starts breaking back above yesterday's or the previous day's close, that's your signal to go long. Got back up to that daily Keltner at around 38.60. It's why we track these things. And fell back to moving averages. Now going to be gapping down about, where's ES? Gapping down about 22 points. So going to be back at this 3,800. Let's see if 3,800 can provide support. If not, we're going to that 37.80 where that daily 21 sits. But if we can hold yesterday's low and the daily 50 at around 3,800, looking for SPX to get back above 38.15 and try to start the journey back up to yesterday's highs. If we start to give out 3,800 going to 37.80, should that give out back to 37.60-ish? Yep. On to SPY. SPY trying to, well, slipping a little bit below 380, but going to be opening right near it. We have the daily 8, daily 50, and 15 all in this first 1 hour cloud around 378.5. So if we can hold above yesterday's lows and these daily moving averages, looking for SPY to get back above 380, push through 381, 383, and back up into these squeeze tops, 384, 385. But if we just keep slipping, first up that daily 50 at 378.5. Should that give out back to 377 at the bottom of this 2 hour squeeze where that daily 21 will be sitting? Should that give out, we're 374 is the next target down. TSLA. Oh, let's see. Have key levels here around 190. We did slip a little bit below those yesterday, but then we got back above. Made a nice push up. Those 200 calls on Tesla hit our buy levels and provided some great returns. I think pretty much a double or a little more. Let's see, fell back and closed near that 190. Had a little gap up and coming back to 190. So looking for 190 to hold. If it starts to give out, we're going to test yesterday's lows, 189, 186.75. But if we can hold up 190, looking for a push through yesterday's highs around 195 to get back to 200. If we do start to give out yesterday's lows, we have that third Keltner at 182 and this key level around 180. So that would be the downside target should we start to lose yesterday's lows. We have a tiny sliver of a squeeze around yesterday's lows, but should they give out, that's the next target. If we can hold up and get it through this 190, 195, back to 200. UVXY. So in that drop yesterday, UVXY took back off to the upside, making it to the daily 8, and now it's sitting up here. So for us to hold our squeeze bottoms and see a bounce today to stay in our range, we need UVXY to stay under 10. That is the big key number. We need to stay under 10, reject this daily 8, start to come back down below 9.5. And if we can get to squeeze tops today, we need to see UVXY go below 9.5 and head back down to where it started yesterday around 9.2. But if we're going to see more downside today and break out of these squeezes to the downside on the market, then we'll probably see UVXY get up to 10 and try to push through 10 to get back to recent highs around 10.3, 10.4, and our moving averages around 10.5. VIX. So, VIX got down below 24.5 yesterday in that rally up. But if you notice, we rallied up pretty hard. VIX barely slipped from 24.5 to 24.25. Then once it took off through 24.5, that confirmed the downside sell-off. This thing shot up to 26 from there. Now it is clinging around this daily 8 and first Keltner the downside around this 25.5. So if we're upside in the market today, we need to see VIX stay below 26, stay below 25.75 where that daily 8 sits, and start to make its way back to 25, maybe even 24.5. But if we're going to see more downside today, we'll see VIX likely hold these overnight lows, 25.25, get back to 26, and make the journey up to 26.5 where that daily 200 sits. So that's it for today. Hopefully this was helpful for everybody. If you found this helpful, we'd appreciate it if you threw a like on the video on YouTube. Definitely helps us out. One last thing I want to point out. I like to cover this every day. These moving averages are the 45 EMA from multiple time frames, all intraday time frames, so 4 hours and below. I like to track these just to measure trend and continuation. Since last Friday, we have started to push back into our moving averages and rallied through them. Now we are above our 4 hour, which is this blue line, and all of our moving averages have caught up over that blue line. So we are bullishly stacked and coming back to test. So very simply, that 4 hour 45 sits right at our key level, 3807.5. It's usually not by coincidence that things like moving averages line up perfectly with levels when we're about to test them. So very simply, if we can hold 3807.5 at open, that is quite bullish, and we can see a bounce and push through our moving averages. Once we get through 3830, we are back above all intradays, and we can push right back up to our zone above and our squeeze above. But if we start to lose that 3807, we are falling below all of those moving averages. They will pull back under and be bearishly stacked, and will likely fall back to our 3773. One saving grace that we have is yesterday's lows. Call it 3790 and 3800. We could slip through, but if we hold right there and get back above, still bullish. So let that be a guide today. 3807 and a half, 3800, 38, and yesterday's lows. We need support there, and we need to get going back through 3830. Otherwise, we could break down through yesterday's lows back to 3773, kind of where we started the week. So that's it for today. Thanks for tuning in, and good luck. We will see everybody in the room.